Our railways discussion forward. In fact, we have with us Rahul Mithal, the chairman and MD at RITES Ltd, joining in on the show right now. Rahul, clearly the railway capex has been a big theme of late, right? Walk us through what your sense is about the on-ground situation. Are the green shoots really blooming into something larger?
In fact, the key strength of RITES is that it operates across sectors, and specifically as Indian Railways as a client, the boost in infrastructure in the various sectors of IR as a client will definitely help RITES. For example, we recently got an order for station development. So IR is going into station development in a big way. We recently got an order for the Kollam railway station development, which our share is about 164 crores. And moving forward, we bid for a number of projects also, both in the turnkey mode and the consultancy mode, whether it is station development, whether it is, new lines doubling. This growth in infra from IR is definitely going to be a positive for RITES moving forward.
Right. So is all the talk about railway capex actually converting into fresh order inflows? And where is it that you see the order book, say, let's say, 2 years from now, for you in specific?
So our current order book is, as of 30th September, 5,000 crores. Out of that, the consultancy is 2,400 crores and the turnkey is 2,000 crores. And export is 300 crores and balance is leasing in our subsidiaries. So the key point is that our export order book, we started the year with 450 crores because these are primarily orders which were received pre-COVID, the Sri Lanka and the Mozambique order. And this 450 crores, out of that, the balance remaining is 300 crores, which will even out in Q3, Q4. And now in the last few months, 6-8 months, as the world has opened up, we are aggressively pitching for export of rolling stock orders across various countries. And our effort is to get some orders at the earliest so that this gap in revenue realization from fresh orders and the old orders which will finish is minimized to the, to the least.
Rahul, with the railway capex as well increasing, how much of a market share gain are you penciling in? What's the growth guidance for the consultancy business in particular?
So our consultancy order book is currently at 2,000 crores, and we are getting consultancy orders across sectors. We have 8 different sectors which operate all across, whether it is the metros, the highways, the buildings, ports, airports. So we recently got an order for Ahmedabad Phase 2 Metro, which is about 42 crores. So moving forward, we have bid in a number of areas for consultancy, and in general, the higher budget allocation for various sectors in infrastructure is definitely going to help us in more and more consultancy orders. Further, we have also bid for a number of international consultancy orders across sectors under our initiative of RITES Videsh. And that is already giving us some orders, whether it is we got an order for highway in Guyana, we got an order for rail infra in Ghana. So across sectors, both in domestic and international consultancy, we are getting orders, and we are hopeful that we continue to get orders in the coming quarters.
And given that brokerages fear that there will be moderation in margins, largely on account of the higher revenue from the turnkey segment and the lower margin profile of export orders, what's your outlook on margin and guidance?
So considering that we knew that our export order book is less and the revenue realization in Q2 would be lesser from this revenue stream, we strategically concentrated on our turnkey stream of revenues to prop up our top line. And that's why you see whether sequentially or even H1 to H1 comparison, the turnkey revenue doubled. To prop up and secure our core EBITDA margins, we concentrated on the key consultancy orders, which were higher margin, some of them which were higher margin orders, to ensure that our margins are secure. And that's why if you compare H1 to H1, and that's our USP, that even though one of the high revenue streams, that is export, was lesser, but in spite of that, year on year, we've shown a 13% growth on top line, about 12 to 13% growth in the bottom line. And our core EBITDA margins, we've been able to secure at 26%. Moving forward, in both Q3 and Q4, as I mentioned, the contribution of the export stream revenue would be lesser. So because of that, we will again focus on both the high consultancy orders to try and keep the margins intact to the extent possible.
Good morning. Now, if I were to see the share price of RITES, it's higher by 50% in the last 6 months. As you all know, markets look forward. So let's look forward, but with a longer term vision. How big can RITES be in 3 to 5 years? Can you share your growth plans going forward? Because clearly the markets know something.
Well, we are taking a number of initiatives, both domestic and internationally. As I mentioned, RITES Videsh is pitching very aggressively for a number of turnkey and international consultancy orders across sectors. We are also diversifying and taking steps in very key new areas. For example, a few months back, we launched RITES Sustainability, which is engaging with various state governments to work in the National Clean Air Program, the pollution program, the solid waste management program, as well as we are tapping the budget allocation in key infrastructure areas like Jal Shakti, highways, rail infra. So considering that, and most recently itself, 2 big orders which we got post 30th September, which we declared to the exchanges. We got a order for Bangalore Metro, which was about 250 crores for RITES. Most recently on Friday, we got an order for 682 crores for IIT Delhi, the new building. We converted a consultancy order to a turnkey order. So seeing this trend, I see the company growing in a steady way, both in terms of the top line and the bottom line. And in terms of the investors, we've been giving a good dividend. So I see that also trend to be maintained in the coming years.
Okay, so dividend